Hi everyone and welcome to today's morning report on Wednesday the 24th of February with me, Rich Pro Market Analyst at Hantech Markets. The European trading session's got off to a disappointing start again. Markets around about sort of percent lower, and this is once more driven by the oil price. The incredible just twos and fro's we see in these markets are generally just being driven by the direction on the day of oil. And yesterday we saw comments from the Saudi oil minister that production cuts are basically not going to happen because they didn't trust other countries to do it. And also the Iranian oil minister saying that it was ridiculous to suggest that Iran would be joining and taking part in an oil-free freeze of production, because it's basically just returned to the markets, isn't it? After all those years of being under sanctions, so the oil price has been suffering, and just show you on WTI back lower again on WTI, another couple of percent down, reversing yesterday's. Further declines from yesterday. This Brent crude again lower. Not too much on Brent crude, but still the oil price is lower, and basically it's just filtering through into safe haven trades being sort of more preferred. The dollar is actually stronger in the last few days. There have been sort of suggestions from, well, a couple of Fed speakers actually yesterday. Stanley Fischer, the Vice Fed chair, basically saying that he wasn't entirely sure what the impact of this recent market volatility was going to have on the US economy. It's too early to suggest. And Esther George, also another FOMC member, admittedly on the hawkish end of the scale, was pretty much saying that a Fed rate hike in March was still possibly on the table. So that has helped to support the dollar in the last couple of days. But the stronger currency continues to be the yen. The yen being the sort of safe haven trade of choice. So that falling away on dollar yen continues to suggest that the market is under a bit of stress. In terms of the treasury yields, they're slightly lower on the 10-year. That's sort of reflective of the concerns over global growth. But the 2-year is holding up. And that again, I think, is sort of following on from these supportive comments from these Fed members. So, what have we got to look forward to today? Well, we've got the pretty much basically US data. We've got the US flash services PMI at 2:45 UK time, 53.5, so slightly lower from last month. You've also got new home sales from the States at 3 o'clock, expected to come in at 522, so about 522,000, which is around about a 4% decline on last month, but still you'd say elevated and pretty strong numbers there from the new home sales data. So that would be supportive of the dollar again. And then this afternoon, once more, we have the weekly oil stocks, the inventories report from the EIA. Expected to come in around, depending on where you get your forecast from, sort of between 2 and 3 million barrels. Again, an inventory build, which would be not positive for the oil price. So that takes me to my chart of the day, which is the Aussie dollar. Now, we've had this Aussie dollar look to be breaking out yesterday. We did actually move above that resistance coming in at 72.45 area. That broke out above that level. 72.60 was the high, but then closed back below it. That's a pretty, that's a disappointing candle, you would certainly say. Is it a false upside break? I wouldn't necessarily say it is definitely yet, because we're just seeing a bit of a slide. But look at the 21-day moving average, which has been a very good basis of support and sort of been helping to flank this. This uptrend here that we've had since that January low, and it just looks like it's a correction within the uptrend at the moment, and coming back towards that 21-day moving average. It could well even be a chance to buy. Now we've got the initial break, the breakout supports at 71.80 is basically where we're trading at the moment, and that is initially supportive within this move, and it's come back towards that to try and form support. And you've got these momentum indicators on the hourly chart just turning around, aren't they? Those MACD lines threatening to turn higher. Stochastics having pushed higher as well, but I think the MACD line's turning higher and the RSI is sort of finding support above 30. That is interesting. If it sort of continues to build around this point, that could be a nice little buying opportunity that we've got. But there is certainly further room to unwind. As I said, 71.20, where that 21-day moving average comes in, and the uptrend comes in around 71 figure at the moment. So there, as I said, there's a little bit of room still for a bit of a slide, but certainly I think at the moment you continue to say, well, this is backable as a nice little uptrend as it continues. Now, I would say though, however, as a caveat, that this is look at the RSI does tend to quite often come, or certainly in this trading band anyway, 60 tends to be sort of quite a limit. Apart from when you do get these strong runs higher. And at the moment, is it a strong run higher? I wouldn't necessarily say it is. I mean, that one from October was certainly very strong, and that took the RSI to 70. Little one in December, it was okay. A few strong candles there, but you wouldn't necessarily. There's candles in this run higher are necessarily suggesting strength, real strength. So what you'd need to see is this RSI pushing above 60 to really hold that move and really suggest that there's a confidence in this run higher. But at the moment, you'd say that it's positive momentum without being strong. So you'd need to see the support, I think, coming in around this level and then pushing quickly back to make another new high. And so at the moment, you'd say it's sort of borderline, but you'd still say that you're with the trend and it looks backable for now. So I wish you good luck in your trading today, and I'll speak to you later. Thank you.